Welcome to this morning's event. I'm Audrey Russo, President and CEO of the Pittsburgh Tech Council, and this program is designed and led by Monica Takis. She is joining us here, and I am just going to kick off the event and welcome everyone. This is our second event with the Toronto Stock Exchange in Pittsburgh. The first one was last October, gosh, it seemed like yesterday, when we met in person, and we are very pleased to have them back in this virtual format. I know that you're going to find this very, very informative. They offer a lot of excellent opportunities for Pittsburgh companies to go public. And so with the Consulate General of Canada, they have been a long-time member of the Tech Council. Ryan Wall from the Consulate is on the call today, and he will help with any questions that you have about Canada as a place to do business and about the stock exchange. His contact info will be included in the chat. We'll periodically keep it up there. So thank you, Ryan, for being with us. And today we'll be talking about the opportunities for Pittsburgh companies from the Toronto Stock Exchange. Our speaker today is George Khalife. He's the Vice President for the US Midwest. He's based out of Chicago and recently, within the last 10 months, actually moved to Chicago. I found that out before the show, and he is with the Stock Exchange. So for those of you who have requested a one-on-one meeting with the Stock Exchange today, you should have received a calendar invite from Monica. If you did not, put something in the chat and reach out to Monica and she can help navigate through that. You'll access the meeting by using the presentation at the time of your meeting, which has been shared with you. If you did not receive this, again, let Monica know. Her contact info will be in the chat. So before we hear from George, I'm pleased to introduce to you Nigel Neale. He is based in New York City, and he is the Consul and Senior Trade Commissioner with the Consulate General of Canada in New York. I'm very excited by this. I love the partnership. Toronto is not far from us. It's a 4-hour drive, and the relationships continue to be strong. So I can't thank you all enough for being here, and I'm going to pass the baton to Nigel. So welcome, Nigel. Thank you for joining us, and thank all of you for joining us as well.
All right, good morning, everyone. Thank you so much for that introduction, Audrey. It's great to be here on what I'm calling my third visit to Pittsburgh, even though this one is virtual. Real pleasure to partner again with you, Audrey, and our friends at the Pittsburgh Technology Council. We have a long history of working together with the PTC as tech leaders in the important city of Pittsburgh. So I lead our Consulate's trade and investment team for our region, which includes, of course, New York, New Jersey, Connecticut, Delaware, Bermuda, and of course, Pennsylvania. And I'm so fortunate to have my colleague, Ryan Wall, who's based in the city to support our efforts in the western half of Pennsylvania. Canada and Pittsburgh are natural partners, as you said. Back in March 2019, PTC pulled together 150 people together for a reception to celebrate our bilateral relationship, where we highlighted our similar parallel technology sectors and announced an exciting initiative, the AI Triangle, a new collaborative effort bringing AI thought leaders from Pittsburgh, Montreal, and Boston together. We brought down leading voices from Canada's tech sector, MindBridge Analytics and Element AI, to introduce them to you. We met with Google, Carnegie Mellon, and also the Canadian heavyweight with an impressive presence in the city, CGI. This is the sort of business development that Ryan and I do, and we're really excited. So today's focus on the TSX. As Audrey, you mentioned, last October, we did this for the first time with a similar group of about 40, linked in with a Pittsburgh Bio Breakfast event. And I understand Christian Manders is with us today, so that's great. He's a powerful advocate for the life sciences community within the Pittsburgh region, so it's great to see him here too. I just want to give a quick bit of background in terms of Canada's innovation advantage and why this makes us, the Consulate, and TSX valuable partners for potential growth for Pittsburgh companies. Last year, Toronto added more tech jobs than the San Francisco Bay Area and New York City combined, and Vancouver had the highest percentage growth in total tech jobs in all of North America. And that's not to say Pittsburgh is not a technology leader itself, but I must say when we visited Google's Innovation Center, really impressive what they're doing within the city. So our talent advantage is based on competitive incentives, low-cost business environment. We often say that our dollar is on sale with about a 30% cost advantage compared to the USD. And we've got some enabling mechanisms like the global skill strategy, which allows US and foreign investors to fast-track skilled workers into Canada to support growth efforts. We've got market access through 14 free trade agreements, and specifically I want to call out the USMCA, which came into effect on July 1st, doing a lot to promote that across all 3 of our countries, including Mexico. But I do want to leave you with 2 recent Canadian success stories to give you an idea of what we're doing and how the TSX is supporting. So just last week, Nuvei, which is a Montreal-based e-commerce and payments processing fintech, raised, just as of this morning, $830 million on their IPO last week on the TSX, which I understand is the largest IPO in the history of the TSX. And also a company called Lightspeed, also from Montreal. It's a SaaS point of service, omni-channel for the retail and hospitality sectors, launched on the TSX in March of last year, but just debuted on the New York Stock Exchange last week. I mentioned CGI. They're another one of our Canadian flagship companies that lists on both exchanges. So in closing, I'll say, the pandemic has certainly upended life as we know it, but one silver lining that I see, that Ryan sees, is how we can double down to help our companies weather the storm and grow. And this is no more obvious than in the tech sector as we accelerate the push to digitalization. So with that, thank you again, Audrey, for this opportunity. And I want to turn over and welcome George Khalife for his presentation. Thank you very much.
Thank you. Thanks, Nigel.
Awesome. Thanks so much, Nigel. Thanks, Audrey. Again, just reiterating what Nigel was saying in terms of the efforts of both the Canadian Consulate and the PTC. Really appreciate all that you do. These virtual events seem easy to coordinate, but having done some ourselves during these interesting times, it's never very easy to do. So that's the first thing. The second thing I thought I'd mention, speaking to the Pittsburgh community, is funny enough, my trip to Pittsburgh physically was actually like early March. So that was the last flight I ever took after the pandemic hit. So it's near and dear, but hopefully I'll be back soon in person and meet some of you. And I see some friends already, like Matt Belando, Christian Monder. So good to see all of you. I'm gonna share my screen, but just thought I'd reiterate what Nigel was saying in terms of Nuvei going public. I mean, we're seeing a ton of traction in Montreal in terms of AI. When I went to Pittsburgh, I think what I compared it closest to was actually Waterloo in Canada, where we have a really big hub for robotics, which I know in Carnegie Mellon is quite the same. So our corridor, between Toronto and Waterloo, is similar to the way I think about Chicago and Pittsburgh. So we're seeing a lot of interesting companies, and hopefully we can be of value down the road. So I'm going to share my screen. If someone from the team can just let me know, or hands up or something like that, just to make sure you can all see it. Thumbs up, we're good? You can see it? Awesome. Okay, and then just before I start as well, in the chat section, feel free to pop questions. I mean, if we do finish a bit early, I'd love to take some of them. I know we're going to break out into individual rooms and do some meetings, but feel free to check in with some questions as they come up. And then do this. Awesome. So when we look at Canada, we really think of it as world-class in terms of our financial institutions, right? If you think about, obviously, our banking system, we have one of the most soundest banking system in the world. Just even if you look at, the way recession up until now, we haven't had a single bank default, which is pretty strong to talk about. So if you look, among the G7, we rank second from a banking perspective. We have the lowest debt to GDP among the G7. And then from 2020 to 2024, we're projected to be the first in terms of doing business among the G20. So needless to say, just from a macro perspective, before we go into each exchange, just looking at it from a country side, Canada is really both an interesting and up and coming and really tech-enabled place to do business, and we'll talk about some of those examples. When we look at why companies look at TSX or TSX Venture, just showing you a couple of examples, and this is really just to set the stage. Again, we're going to dive a little deeper, but in terms of why or the decisions, if you look at Shopify, this is out of Ottawa, my original hometown where I went to university. Obviously, this is kind of a darling of Canadian tech. It's the largest publicly traded company in Canada as of this year, actually. It surpassed every major bank. And obviously, when you look at their reasons to go public originally, this is a quote from their CEO, Toby Lutke, which really talked about their need to grow, right? If they're going to enter the next level or next chapter of their business and make e-commerce better for everyone, that growth profile is really why they look to access TSX. When you look at a company like PopReach, for them it was really access to capital. The one thing about public markets, which is a bit different than private capital, is that instead of raising larger chunks in smaller amounts, you're raising more frequent rounds or subsequent rounds of financings. We have some companies listed on the venture that have done 30, 50, even 60 rounds of financings, which sometimes is crazy just to even say it out loud. You look at a company like Halogen Software, their purpose was more so to really improve their profile, right? And I think this is really important for a lot of the earlier stage companies. I worked with a startup before joining TSX. It was a fintech company out of Toronto, and I remember how difficult it could be to sell into some of the larger suppliers, customers, partners. I think with any startup founder listening, you can resonate with me on this. They would have to go through our investors, or we'd be put on preferred vendor lists. And so having that visibility, the credibility and transparency up front really helps out. And then finally, you look at a company like Spin Master, where for them it was really all about M&A, right? It was about making acquisitions. It was about using that share currency instead of cash, or really burning through your runway. So just to give you a couple of examples to set the stage. When you look at the markets for capital on the world stage, Canada ranks third in the world, right? We're behind the US and then China and Hong Kong. So if you look at just in 2019, we helped companies raise roughly $40 billion on both exchanges. If you look at the past 5 years, that number is $254 billion. So we're really a hub for capital. It's not to say that Canada is dry, or when you go up north, it's more difficult. I know we hear some of those things, and we can address those challenges, but it really is a hub for capital. I mean, especially if the business is fundamentally sound.
Hey, George.
Yeah.
Your PowerPoint presentation isn't showing correctly. I'm not sure what slide you're on, but if you can try to reshare your screen.
Oh, sure. No. Thanks for letting me know.
And I can see the global market for capital slide. Is that correct?
Yeah, that's
okay.
The one.
There you go.
Is it working now?
It is, but it's not full screen if you wanted to go full screen.
Okay, perfect. Maybe when I did that, it's working now?
It's not.
Interesting. When I go full screen for some reason, if you're okay with it like this, I mean, I know it's not. How's that? Let me try one more time. Working?
I think you're sharing the PowerPoint rather than the screen, the slideshow.
Okay.
If you look under share screen.
I'm gonna share it one more time. Apologies for that. Here.
Would you like me to do it, George? Oh, there it goes.
It's working out?
You're good. Awesome. Global capital for market for capital.
Thanks, Monica. Awesome.
Yep.
Cool. So we were just talking about this slide. Again, sorry if you didn't see it. I'm just going to keep it up for a second. So as I was saying, we rank third in the world in terms of capital, outranking the UK, Australia, and some of those exchanges. The other question we typically get is, well, is there a home bias in Canada, right? Like in terms of trading or the investors that are involved. One of the interesting things we love to talk about is, and being in the States, I understand it a bit more. Is the fact that 40% of our daily trading actually comes from outside of Canada, and a big chunk from the US. You see some of the world's largest asset managers on the left hand corner. Firms like Citi, Credit Suisse, Goldman Sachs, JP Morgan, UBS. These are some of the firms that are partaking in trading TSX and TSX Venture companies. And the world really lists in Canada, right? We have a great international platform. I think we rank today second in the world in terms of international listings. That changes year by year. But if you look at and this is as of June of this year, we have roughly 219 international companies, 108 in the States. And, if you look at just in terms of IPOs and new listings, and this is between 2015 and Q2 of this year, we've had 91 new listings from an international perspective. So companies outside of Canada, among which have raised $34 billion. And we have, we have it kind of spread aside from just the US. We have Africa, Australia. In some of those segments, it's really around mining. It's around oil and gas, and then real estate. In the US, it's probably a split of all three. I would say mining, real estate, and tech and life sci is really what we see in terms of the sector split. One of the things historically that Canada gets associated to, which is important in many respects, is the fact that it's heavy in resources, right? We have a really robust space in mining and minerals. In fact, if you look at the TSX Venture, which is our junior exchange, really the main premise historically was to help a lot of those junior miners get started. Because if you're starting out a project in terms of exploration, where do you go for capital? There aren't VCs that are necessarily focused on mining. And so this was a really important runway for capital. But as the years went by and different sectors emerged, the TSX Venture and the TSX really started to be a robust platform for different sectors. And so to give you an example, in terms of that composition, you can see that 40% of our exchange by market cap is made up of growth sectors, of which we call clean tech, communications media, diversified, life sciences, and tech. And so for us, that's really kind of the innovation or growth sector bucket that we're focusing heavily on. We're not forgetting about resources or financials. Those are extremely important to the exchange, but just to say that we're moving away from just being seen as that. So I love to talk about this part because it really kind of shows the main difference between the Canadian and the US market. To give you an example, being in Chicago now for about 10 months, if you look at the more recent IPOs, we had two that were significant. Go Health, which was a telehealth services platform, they went public and raised roughly 600 or so million on their IPO. Sprout Social, which is more kind of like an employee engagement platform, they raised close to 150 million, if I believe. So if you look at just kind of the average, right, companies in the States are raising anywhere between 100, 150, or 200 million on their financings when they go public. These are companies with $1 billion plus in revenue. So just setting the stage that in the US, it's really serving later stage businesses. In Canada, it's a bit of a different model. We call it a two-tiered market in the sense that you have two major exchanges, right? You have the TSX, which is for later stage businesses. This is our senior exchange. And if you look at the average financings, they typically range from 60 to 70 million. That on average, we're seeing companies on our senior exchange raise 60 to 70. This year, as of June, that number was 77 mil. And then the average market value of these companies is about 1.8 billion. So that's our senior exchange. Think of it as our version of NASDAQ or NYSE in Canada. But then we have this junior exchange, which I think is super interesting in terms of where we may fit. And it's called the TSX Venture Exchange. And the TSXV is really focused on earlier stage companies. And I think you can see that by some of our data points. So if you look at the average financing, the average is around 3 million. It ranges typically between 2 to 5. But 3 million, I mean, comparing that to private capital, that's no different than maybe a late seed or early Series A, depending on where you are in the States. Maybe in the coast, it's a bit different, but this might be like a friends and family. But in the Midwest, it's a nice kind of late seed or early Series A. And then in terms of average market values, that number is close to 30 million. So the values of companies that are listed. So we have 3,200 companies approximately on both exchanges. They're almost evenly split. You have roughly 1,600 on the TSX, 1,700 companies listed on the venture. And really the way I think about this, at least in terms of why we have this set up, is, and if you're a basketball fan, if you're keeping up with the playoffs recently, I really think about this as, the NCAA going to the NBA, right? It's really an incubating platform for companies to test out the public markets, prove their viability, build the credibility, execute on their growth plans, and eventually, once they get to a certain market cap, they're able to actually uplist or graduate to the TSX. And if you're a US company, eventually, if you have your eyes set on that a major US exchange like a NASDAQ or an IZ, you're able to use that listing on the TSX and then dual list on a major US exchange. So we're not here to say to completely forget about, the major US exchanges. What we are saying is potentially using or leveraging the TSX as a more seamless way to get your footprint, in the US when the time comes. And so talking about that, I'm just going to take a quick drink of water. When we really talk about that sort of incubation, I love this slide too, because it kind of shows you the real numbers behind it, right? So we have close to 700 companies that have graduated. So it's not a new program. It's something that we've done for a while. It's something that we've had success with. You can see that almost 40% of TSX innovation companies, by innovation, I mean tech, clean tech, or life sci. So 40% of TSX companies in those sectors have graduated from the TSX Venture. You have some examples below. If you're an esports fan, you might have come across the company Enthusiast Gaming. They now have a market value of 130 million, and they were a TSX Venture grad. If you were close to the cannabis space, Canopy Growth was one of the first companies to go public. They had a lot of hype behind them. Snoop Dogg was on the board. It was an interesting market open. To be frank, I quite enjoyed that one. But they started on the TSX Venture, ended up uplisting within a year to the TSX, and have a market value of close to 7.7 billion. Just to give you some anecdotes. Well, when we look at the indices and how they perform relative to one another, and I know this event is really focused around tech. So if you look at the S&P TSX IT index, right, and it's kind of at the bottom with the dotted red box. We're kind of showing you the annualized total returns. So these are all percentages, and you can see them in different segments, whether it's the 1 year, the 3 year, the 5, 10, or the year to date. It really outperforms every index. I mean, if you look at it versus or relative to the S&P TSX, if you look at it relative to S&P 500 or the NASDAQ composite or even the Dow, it really outperforms. So again, back to what Nigel opened with examples like Nuvei, Lightspeed, Shopify, CGI. These are examples that are really propelling these indices forward. When we think of a public venture capital, it's funny because when I moved to the States, really the notion of TSX Venture wasn't widespread. People didn't really know, and I mean we're still kind of on the cusp of that educational side of things, right? To really help companies learn about what public venture capital is. I think a lot of tech companies, and I'm sure you would agree with this, is they know about VC, they know about private equity, crowdfunding, the angel rounds. They're more familiar with these things. Public venture capital doesn't always make the headlines of kind of TechCrunch and VentureBeat and stuff. So it takes a bit more educating upfront. But think of this as, again, a platform that gives way for early growth stage companies. And we'll talk about what profile of companies we typically would look for. And then on the investor side, instead of it being, a fund like a venture capital where there's general partners or LPs, the investors typically on the TSX Venture are individuals like you and I, family offices, small cap banks or asset managers. So we actually have a very robust banking community in Canada that loves to help finance these earlier stage companies, right? I mean, if you look at the TSXV, in terms of who actually trades these companies or small cap stocks, it's typically what we're talking about, the family offices, the small cap banks, and then you and I. And in terms of, I think mindset is super important, right? And I want you to know kind of upfront that this is a financing option. It's no way to say that it's the best or right financing option for every company in every situation. I would be definitely lying to you if I said that. And so, always kind of remember that every financing option has a pro and con. But the point of this event and the point of going through these slides is, as a founder, it's important just to have all the financing options lined up, really understanding each one, and then figuring out what's best for you. And to help you think about that, in terms of mindset, going public is really thinking about it from a lens or angle of built to last versus built to be sold. I think, when you're raising large private rounds, you start having these pressures, right? And again, I saw that when I was at Owl. I saw that when I was on the M&A side. It really starts becoming a bit more of a kind of pressure, not only to execute, but to figure out how am I going to, 10x or 15x the return of investors at each round. But I think that's an important thing to think about. In this case, again, you're accessing capital from a broad investor base. In I guess most situations, the founding team or the executives really retain greater influence versus giving up a larger chunk of equity up front. We talked about that enhanced profile or credibility that, in the first slide, we were kind of looking at different decisions or why companies go public. This is one of them. In some cases, number 5 is an interesting one. Some CEOs or companies really are intimidated from this aspect of it in terms of, going public is not easy. Right? It certainly isn't. I mean, when you think of cost of capital, there is effort up front. And I think even raising private rounds is not easy either. Both take a bit of time to go through, certainly a lot of meetings, a lot of yes and no's and due diligence and term sheets back and forth. So it's not, and I see some of you shaking your head. Like, I think if you've gone through this, Ingrid, I see you. I think if you've gone through this, you would resonate. But I think one of the interesting things is if you're up for it, right, it really helps build that discipline internally, because you really need to have good internal controls to be a proper public company. And so it can help you build that if it's not already there. We talked about currency for acquisitions. By currency, it really means instead of you raising, let's say, 5 million on your Series A and using 2 or 3 to buy a target company, you're able to use shares as a maybe split or as a full offer of that. And so it just helps from a cost and tax perspective. And then obviously liquidity for shareholders. If you're an early investor in a company, once they go public and the escrow period is done with, you're able to liquidate some of your shares or all of them as you choose. So that's kind of comparing it to traditional VC. Again, there's pros and cons, but just to highlight some here, in terms of, we talked about liquidity, we talked about influence. In terms of influence, and I will say kind of the other end of it, when you're in the public market, you're really in the public eye, right? And so as a CEO, you have to not only sell the vision, but when there are material changes, those have to be made publicly through press releases. So on the VC side, there's ongoing influence from VC investors, right? Board seats, control over hiring, firing strategy. On the public markets, it's the public really putting pressure, good or bad, right, on the strategy, on whether you executed, on whether you didn't execute. So I think both come with different kinds of pressures, and it's important to know who and how to handle that. I think I had a conversation with a CEO here in Chicago, actually, of a tech company that's raised, well over hundreds of millions of dollars. The founders had successful exits in the past, and one of the conversations that we've had was, well, why would I kind of bypass the major U.S. exchanges? Like, what, apart from obviously the things that we've already talked about, why look at Canada? Why look at TSX, TSX Venture? From a tech perspective, I think one of the things we haven't mentioned yet is really the eyeballs. What I would encourage you is maybe after this event, just go to Google, go to the news section or news tab, and just type in Nuvei and see how many press releases came out from just one company. And I encourage you to also do the same for Shopify, for Lightspeed, and for the 7 unicorns that we have, right? And 7 isn't a big number. And I think we have a long way to go. And, I definitely think that we're getting there. We're starting to pick up a lot of steam, but 7 relative to how many unicorns there are in the States, which I think there's close to like 400, is a very different ballgame, right? This is kind of the big fish, small pond theory. So if you go in and list in TSX or TSX Venture with a sizable market cap, in the US, it might be insignificant for the most part because it's just a gigantic market with a lot of similar examples. But I think if you look in Canada, because there aren't that many, you really get a lot of the spotlight shed on you, right? Not in terms of just press releases, but also in terms of analyst coverage and really the marketing push that we help on our side. So we have 7 unicorns. These are companies with $1 billion plus in valuation. We have 43 centaurs, which are companies with 100 million plus in valuation. I love these names. I don't know whoever came up with it, but I like it. I don't know if you also heard about this new trend about instead of unicorns, calling them camels, because they're more steady. They can withstand pressure, long distances without water. So it was kind of a segue in terms of companies that withstood the pandemic and other hardships. but who knows? Maybe we'll have a camel section here. And then in terms of graduates, we've had 54, and these are 54 companies that are among the umbrella of innovation in terms of incubating upfront. I'll highlight some of the examples. I don't know if you can see my cursor, but if you look at a company like Solium, we're actually a client of Solium as well. They're basically a SaaS platform for private public companies to help them with their cap table, their employee options. This is fascinating, right? Like, they went public on the TSX Venture in 2001, did a $2 million IPO, 2 million, right? That's basically like a family and friends round. And then in 2019, they got acquired by Morgan Stanley for $864 million. So again, you see that runway extended for a long period of time. That's the other part of public markets. It's not short-sighted. This is not like a 4 to 6 year project or horizon, and then we got to cash out quickly and you have to demonstrate returns. It's a bit of a different mindset. We talked about Canopy Growth in terms of the cannabis side. They went public in 2014, and in a short order, saw their valuation in December of last year, close to 9.5 billion. And then, one company to highlight again is the Stars Group. This is on the gambling and poker side, but we flag it as tech because it's fully online. They went public on the TSX Venture in 2010, did a $5 million IPO, and then December of last year had a valuation of 9.8 billion. So just to give you a couple of examples, again, you can take a look at whether it's BSM, Knight, Carmana, or Westport. These are some examples to show you, their starting point and their finish point are extremely different. All right, so I'm sure by now you're like, George, this sounds cool, it's interesting, but like, what's the actual profile or the criteria that you all typically look for? For this slide, just keep in mind we're focusing mostly on TSX Venture Exchange. Happy to, if it comes up, happy to talk about TSX. But really, when you think about TSX, it's somewhat similar. Just think of it as larger size companies. Okay, so really the criteria doesn't change that much. When we look at sectors, obviously we're sector agnostic. We talked about mining, resource, but just for the general theme of the Midwest or Central US, I should be correct, because I know, sometimes Pittsburgh isn't directly in the Midwest, but what I personally look for or who I talk to is really companies within tech, clean tech, and then life sci. My focus is Midwest, Central US. In terms of the company stage, we really look for early commercial or growth stage businesses. To give you an example, from our criteria, in terms of like, if you ask me, what the listing requirements are from a revenue perspective, right? Let's talk about the stage or revenue profile. We can actually, from a paper standpoint, we can actually list companies that are pre-revenue, right? That does exist. We have seen companies that have done that. But to give you an example, like in talking to a lot of the bankers more recently, they're not really attracted to pre-revenue companies in this current environment, unless it's like a specific niche, right? Like the drone delivery segment or somewhere where it's like a bit cap intensive up front and you need to determine that. Clean tech is a good example, right? With like wind turbines or lithium ion batteries, you can sometimes it's more difficult to demonstrate revenue up front versus like a SaaS company. And so keeping that in mind, what we're trying to look for is obviously post revenue, ideally, and really recurring predictable revenues, right? Revenues that you can demonstrate over a period of time, quarter over quarter, month over month, year over year. During the pandemic kind of months that we saw, it's okay if you had a bit of a hit, right? I think even the private capital side will tell you the same thing. I think what's important is demonstrating how you're coming out of that, what the resiliency plan is, what you're going to execute on in the next year or two. I think that's important. The sensitivity to revenue is something they might look at, like how much of your revenue got cut because of the retail space, let's say, or the hospitality space, if that's what you sell into. Obviously, from an investor standpoint, we see a host of different examples. We see companies that have been VC backed. We see companies that have just done angels, or frankly, ones that just bootstrapped. The important thing to know there is that companies that have heavily raised money in the past can sometimes find it more challenging to go public. And it's pretty obvious if you think about the reasons why, right? Let's take a company that's raised, $100 million, okay, at a crazy valuation like 800 million, okay? When you now want to go to the public markets, especially in Canada, meeting that kind of, I would say, market value or valuation on the public markets is a bit different. right, you might not necessarily get the same kind of traction. And it's not to say that that's the case for every company. There are situations, but for the most part, if you're very, very funded, it becomes difficult. The other challenge with that is, think of it from the investor standpoint. Now, if I'm an investor that just helped you raise your Series C, let's say we helped you raise 50 million on your Series C. My concern is that when you go public, I want to make sure the company is at the same value or ideally higher, so that once we look to exit, whenever that time comes, it's more favorable from our standpoint, because we have partners that we're looking out for, and we need to kind of multiply the return. The funding size on the venture, we talked about the average, but the range is typically between 2 to 25 mil. This is growth capital. Again, we talked about the reasons or why you'd want to raise public versus private. And then when we look at the management team, this is equally as important as how VCs scrutinize it. We definitely want to look at a management team that has done this before in some capacity. It's not to say that you would have had to take a company public, but do you have a management team that demonstrates some track record of building and scaling companies? Do they have direct competency in the industry? Not always required, but helpful. Does the management team have experience in raising money and exiting, whether M&A or IPO? These things really do help. And if not directly in the management team, can you display that from a board perspective, right? So on the TSX Venture, we require companies to have at least 2 independent directors on the board. And ideally, these directors, would have a public company experience. So in terms of that, current innovation company profile, in terms of how many innovation companies we have on the venture, we have 315. Again, we have about 1,700 in total that are listed. We have 315 in the innovation category. Again, that's tech, clean tech, and life sci. Those companies have an aggregate market cap of 10 billion, but the average market cap is 33 million. So really in that mid-market sweet spot, I think, is where our product or our platform or market really, really fits and serves the Midwest perfectly. Because if you think about Pittsburgh, Chicago, Ohio, Michigan, these areas, this is really what we're talking about. Like, this is the bread and butter of our regions. In terms of their profile, the average revenue for these companies on the TSX Venture is about 10 million. Now, keep in mind, this is as at December 31st of 2019. But I want you to know something about that 10 million figure. That's the average that we took as of December 31st. It's not to say that's what it was when they first went public. We saw examples of, Solium doing a 2 million IPO. We have some companies that are smaller than the 10 million revenue segment. Some have 1 million, some have 5, 10, and some, we see have 20 or 30 million in revenue. Looking more so in terms of some recent numbers, because the earlier slide was looking at it in terms of a total. So now we're looking at 2017 to 2019. We saw 116 new additions to our TSXV pipeline on the innovation side. They had an aggregate value of 7 bill, and then the average market cap of these companies was 66 million. So interesting to also see the difference between the overall pipeline of companies that we have on the venture versus the more recent ones in the past 2-3 years. We're seeing kind of a higher market cap for a smaller amount of companies that we're looking for here. The revenue is still around that 10 million mark, and this is at the time of listing, by the way. So that's kind of the breakdown. If you look at, again, from the innovation perspective, we have about 60 in tech. This was from 2017 to 2019. 49 companies in the life sciences segment, and then 8 in clean tech that listed. And I think in terms of life science, clean tech, we're really starting to make a push on both of those subsectors, really trying to focus on helping both companies. I think there's a lot of similarities between those spaces and kind of the mining space. From a capital perspective, obviously very different context. But if you think of both companies in those verticals, access to capital, capital early on in the life cycle, and also investors who understand the premise is not always apparent. So we're really trying to make a push there. And then in terms of capital that was invested, so 279 companies raised capital in 2017 to 2019. You can see kind of the split on this aspect or this bar chart. In terms of tech companies, they raised 1.3 billion. Life sciences companies raised 2.8, and then clean tech companies raised 362 million. In terms of the US, 30 companies on the TSX Venture raised roughly 223 million. So definitely making a push. I will say from a US perspective, you know, it's not to say that it's a new territory. I mean, we've really kind of pushed our platforms or markets in the States for quite some time, but we didn't necessarily have physical presence in every kind of pocket or region. So now, having myself in the Midwest, my colleague Delilah is based out of California and covers the West Coast. We have coverage in New York and Seattle. We're really committed to the States, and that's something that we want to make known, right? It's not a flyover thing. We're not in Toronto covering it from Canada. These are two very different dynamics. I think to really build a market and community, I think we can all resonate that you have to be really plugged into the community. You have to know the companies in and out, talk to CEOs early on in the life cycle, and really educate them up front. And then in terms of looking at next steps and what this really means, I know going through this deck is not always easy to digest. There's a lot of numbers thrown at you, but I think really the premise is just understanding that, again, this is a financing option. The TSX Venture Exchange exists for earlier stage companies. It's to serve these companies and helping them raise anywhere between 2 to 25 mil of public capital. The holistic kind of perspective is starting on the TSX Venture, uplisting to TSX, and eventually dual listing on a NASDAQ or NYSE, and really kind of going through the different reasons we talked about, right? Making acquisitions, making financings happen. That's really the substance of why we exist, apart from just kind of a financing platform. There are really good reasons for doing this if it fits the situation. I think some of the things you want to think about is it going to help achieve your vision, right? In terms of vision, I talked to a CEO of a TSX venture company. He laid it out to me like this. He said, if you're a company that really wants to get to that 100 million mark or plus, this is something that you definitely would want to consider, right? Is that in the trajectory? Is the business public market ready? From a standpoint of, do you have audited financials? Like on the TSX Venture, we require 2 years, whereas on the TSX, it's 3, right? Do you have those independent directors on the board that we talked about? Do you have a CEO who can sell the vision, right? So there are a couple of internal controls that you might want to look at. And then timing the market is never possible, right? I think preparation is probably the best key. We saw this in terms of, the pandemic, right? Again, back to Nuvei, they went public just last week. So that this isn't, it's not like they waited after the elections or they waited for the new year. I know these things are sometimes important, but really in the grand scheme of things, they're more short-sighted. And again, public markets, you have to think for much more long-term than on the near term. We saw even a company like Dye & Durham, which is a legal tech platform. They raised, I think, close to 150 million, if I'm not mistaken, close to that. And then they listed in early June. So we certainly saw a bunch of financings, new IPOs coming through on both TSX, TSXV, even in a very turbulent time. And I think that, the last point is really picking the right advisors, right? From my perspective, I can never sell you on going public. You're the CEO. Ultimately, this is your decision. My whole perspective is honestly to be, I think, as best of value as I could be in terms of guiding you through the process, explaining this in as simple way as I could, and then helping make the right intros, whether that's to legal counsel, whether that's to the investment banks in Canada. I can really be kind of your quarterback if you choose to launch the process and make this as kind of seamless as possible. Because, going public sometimes, I reference this from a exercise perspective. M&A is getting off the treadmill. Going public is like tuning up the treadmill from level 6 to like level 15 with incline of 5%. So it's you definitely take it up a notch, but it doesn't have to be taxing. Like, you can work your way up, and that's why TSX Venture exists. So that's really what I wanted to cover. I just wanted to show you this slide as well. This is our team. Danny Lipkin heads up global BD for the innovation sector. He's out of Toronto, and then here you kind of see the regional leaders who charge different sides of the world, right? We have Quebec and Montreal, we have BC, California, as I mentioned, myself in Chicago. Israel has been a massive presence. In just a year and a half, my colleague Yossi has helped close to 8 companies list on TSX Venture, which is phenomenal. It's definitely a great region for us. Europe, London, this is kind of the MENA region as well, so it's Middle East and Europe. And then my colleague Guillaume is in Peru, actually, which is a cool place to be. I'm kind of jealous of the fact that he gets to go around LATAM, but he covers Brazil, Chile, Colombia, and a few other areas in addition to Peru. So that's the team. Feel free to reach out with kind of any questions after this event. Just want to quickly pause here, and I'm going to stop sharing my screen and then see if we have any direct questions. Monica, I don't know how you want to go about this, if you want me to just kind of read them. We have about 15 minutes left, so.
Yeah, if you want to chat your question, or if you want to just unmute yourself and speak up, I think we have an intimate enough group to just speak up.
Yeah, I'm fine with that as well, actually.
Mm-hmm.
It's more, so feel free to unmute and then just ask your question if you choose to.
George, this is John. I texted over a couple questions. Just a couple quick ones. Are those figures you gave in Canadian dollars or US?
Yeah, they're in Canadian. Sorry, I should have made that clear. Yeah.
And are there many companies listing, moving their listings from China, or Chinese companies moving to TSX?
Yeah, so it's a good question. We actually have a representative in Hong Kong, kind of covers Hong Kong, Shanghai, the whole Southeast Asian market. We're seeing a resurgence, I would say. You know, I think in probably the past like 10, 20 years, we were looking more aggressively at that market. We did come into or run into some issues with different standards, right, in terms of reporting or accounting standards that we had to really get over the hurdle. It's different when you're talking in the US landscape, right? A lot of the standards are quite universal, whether it's IFRS or GAAP. It's easier to audit. We can fly over and see certain things and make sure or validate the businesses. So I think we're coming over that hump. If you follow the IPO markets, we're definitely seeing a ton of new IPOs emerge from that region, especially in the biotech space or in the tech space. So definitely open to it. We haven't had kind of major or big case studies or successes as of yet, but definitely something we're paying attention to.
Thank you.
Any other questions?
Oh. In terms of, there was a question, I think, James, you were asking, what are the listing requirements for a US domicile tech firm, especially revenue and earnings requirements? So as I was saying, from a revenue perspective, and in terms of like just looking at it from an exchange perspective, you could be pre-revenue. In the case that you are pre-revenue, you have to demonstrate a detailed 2-year plan of how you're going to get to post-rev. If not, like let's say you have revenue, our lowest tier, we have 2 tiers on the TSX Venture, basically each for a different size of company. Our lowest tier, or tier 2, which is for the smallest companies on the TSX Venture, you have to have revenues of at least 500,000 Canadian, or 750,000 in net assets, or do a $2 million financing. So it's either or, essentially. And if you comply with that section, you kind of meet our check mark from our perspective. The one thing I did want to mention in terms of, I love the word domicile. You don't have to change that status. You can be actually a US company incorporated in the States, wherever that is, and then go public in Canada. You don't have to change that incorporation. We heavily encourage having presence in Canada. So that's the caveat, whether that's through an alternate office, an employee, having a big investor or suppliers or customers. Ideally, we would want to show some traction or attachment to Canada. And it's also important from a perspective of raising money down the line, right? From doing these kind of mini roadshows or building relationships with bankers and traders, it's important to have some visibility in Canada. And that can be through an extension, an IR firm, a representative, etc. No worries, James. I think that's and then there was one I can answer as well. We have some time as well. It's I think John Hammer, you were asking, do many venture funds invest via TSX Junior Exchange? Can you just elaborate on that if it's possible, if you can? maybe unmute.
Well, excuse me. I was just wondering if many venture funds, particularly in Canada, if they prefer investing directly, or some of them will go on the exchange. Just wondering get a feel for what sort of proportion are actually funds.
Gotcha. So, and just so I'm extremely clear, you're referring to venture funds that look to potentially list on TSX?
No, venture funds that invest through the exchange, that buy shares on the exchange, rather than doing a private placement. I see.
I think it's quite common. You know, I think the what we see in Canada in terms of the VC community, like even if you look at some of the largest ones, you know, Omers being one. Omers was one of the earlier investors in Shopify. They tend to, you know, get in there quite early. So call it Series A, Series B. Once the company crosses that B round, similar to the Midwest or Central US, we have that funding or financing gap in the later tranches, which is why you see a lot of companies end up going to the coasts. In many cases, that TSX Venture is a nice segment if it, you know, fits the company's growth plans and so on. And so it's from both angles. It's either portfolio companies, you know, looking at TSXV as the next option and liquidity for investors, or venture funds, you know, getting involved from a trading perspective, right? In some cases, if they do their private placements, in most cases, it's smaller institutional investors, you know, family offices, smaller hedge funds, asset managers, some of the small cap investment banks. And actually, you know, one of the things to point out, I don't think I mentioned this when I brought up the two recent IPOs in Chicago. One of the really cool things to see is when GoHealth went public, as an example, that $650 million IPO in Chicago around telehealth services. If you look at their underwriters or investment banks that were involved, RBC Capital Markets was one of those banks. If you look at a company like Lovingo, Sprout Social, some pretty big Chicago names that I'm referring to, you see, you know, an investment bank like Canaccord get involved in their private placement. And Canaccord is a very well-known Canadian bank that has both Canadian and US coverage. So I believe they have presence in the States, if I'm not mistaken, in Boston, I believe, and in a few other areas. So just goes to show that we're really paying attention to the Midwest and Central US.
George, I think there's one more question, and then I think we'll wrap it up before 11. Right, Monica?
Yep.
Awesome. And then this one comes from a good buddy, Christian Monders. So can you talk about the Canadian equivalent of SPACs and how to find them on the exchange? Any insights into figuring out their strategic focus? I love this, Christian. I don't know if you're reading my mind or you have access to my computer. I'm kind of nervous, but and I say this because I just finished writing an article last night regarding SPACs. So for those of you who are not as familiar, SPACs are special purpose acquisition corporations. It's a bit of a tongue twister. Basically, these are blank check companies. When you hear blank check companies, what that really means is companies that don't have any operations. They only have cash on their balance sheet. They raise a minimum of 30 million, at least 30 million. And then they have a defined period of time to find a company to take public. With that being said, obviously, you've probably heard major headlines, you know, like Bill Ackman did a $4 billion SPAC recently. Even the owner of the Golden State Warriors just filed 3 new SPACs with the SEC. This market is quite hot in the States. It hasn't been getting the same traction, I would say, in Canada, and for a good reason. If you look at the Canadian market, we actually have a vehicle or a financing I would say vehicle that we refer to as mini SPACs for those in the States. We call it capital pool companies. It's the same concept. These are publicly listed shells that start out with no operations. The difference is the financings are much smaller than the 30 million. They're typically less than 5 to start. They end up looking for a private company to take public. So the founders of this shell or blank check company, they take that public on the TSX Venture. We currently have up to like 90 actively listed shells. Again, these are, for the time being, they're kind of empty. They pool in, that's why the name is capital pool. They pool in a small amount of money. They then use that money only for the reason of finding and acquiring a target company. And that process of doing so is called the reverse takeover. If you look at the TSX Venture, some of the most common, most successful ways to go public is through that process. So we certainly have it in Canada, but I would say from a SPAC perspective, it's not as popular. Hopefully growing traction, but as of yet, it's been mostly the mini SPACs that I'm referring to. Great question. And with that, I think we'll conclude there. Monica, I'll hand it over to you, but just wanted to say thanks everyone for tuning in. I really appreciate, I know that we're all getting zoomed out. So having you tune in for the 40-minute or so is really appreciative, and hopefully this was of value.
Yeah, thank you so much, George. Audrey, are you there? Do you want to say a couple words, and then I'll just explain the breakout rooms to everyone? I think.
Hi.
Oh, there you are.
I'm here.
Hello.
That was great. So thank you all for being here. That was great. We're now going to go into our meetings, Monica, right?
Yep.
And I believe if you're not going into any meetings, or if you have questions for Monica, just reach out to her. You can send her a note on the chat.
Yep.
And if you don't have any meetings set up and you want to, again, reach out to her. But I think George and Nigel and Ryan should have shared their information. So there's easy ways to get in touch with them. This is a long-term relationship with our friends in Canada. And we look at this as just a continual opportunity. We'll continue to stay connected to you and really appreciate your leadership and interest in us. And, you know, while sometimes people don't think that the time is right to get engaged, I would say it's never too early to have conversations if you're looking to scale your companies. There's lots of opportunities for connections that are, as you can see by George's presentation.